Yo, 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 it's Intermarket here again. So today, guys, this is going to be part 2 of the intermarket analysis, and we're going over mainly just the VIX, right? So in this part series, we're just going over the VIX. We already went over pretty much what's the intermarket analysis and telling the bias and the direction, right? But now we're going over just the VIX. In the next video, we'll be going over the XVIX, then XLG. Now, the reason I'm just going over the VIX right now is because I want you to know how to read the VIX, how to utilize the VIX. Now, this is my interpretation, how I use the VIX. Other people use the VIX differently. They like to look at the 20 to 40 and kind of gauge it like that. Me personally, I try to use it as a regular asset and pretty much using it like the intraday levels, right? So first thing first, what is the VIX? The VIX are volatility index is the market's fear gauge and the market analysis with ES and NQ futures. You can use it as an inverse indicator. Now, what is the inverse indicator? You're using the inverse, so negative. So if it goes up, you're looking to go down on ES, vice versa. Now, if you look at the bottom left, it's a forward looking. So when something is forward looking, you kind of predict the market in a way. Now, it predicts the future of the S&P 500 market vitality. Now, one thing I tell a lot of traders, right? Don't try to predict, try to react. So let the market confirm itself, let the VIX show its hand, then you bounce on the market, right? And what I like to do is sometimes I don't even like to look at ES. I like to have my levels on ES and then just watch just the assets of the intermarket analysis, because that's going to give me the bias and actually give me the duration and also the timing, right? So the next thing is going to be the inverse relationship. When stocks fall, the VIX usually rises, vice versa. That's the same thing I just said with the forward looking. It's just the inverse. Now, rule of thumb, when the VIX is low, typically under 20, the market trends are more stable and more reliable. When it's high, above 20, expect a sharp turn and faster moves and potential reversals. Now, the longer you use the VIX, it becomes more as you can see the characteristics, and you can start seeing the trends in the market. Now, if you ever switch to a new asset, it's like, for example, right, I just switched to ES. I have to learn ES because NQ is more faster, right? NQ is more faster, and I'll have to control my risk better on NQ rather than ES. My max risk is 3 to 4 points, right? Differently from NQ, the max risk might be 10 points, might be 15 points, 20 points, whatever that may be. But ES is a little different, so you have to learn it. So the VIX, you're gonna need a lot of screen time. You just need to look at it. Definitely, if you're new to intermarket analysis, if you're not new, you most likely gonna know how to use the tools. Now, on the second slide here. Now, why is the VIX important for the S&P 500/ES? Now, if you look at the top, where we see to have the picture right here, we got the S&P 500 that's in the blue. We have the VIX that's in the orange. Now, we have in the middle, we have the inverse. This is always going to be a rule of thumb. Now, when the VIX goes up, the S&P 500 goes down. The S&P 500, you don't know, it's just the ES. Now, when the VIX goes down, the S&P 500 goes up. All right, that's a rule of thumb that you have to know. Now, the VIX matters for ES because when the market's fear gauge, when the VIX rises, ES usually drops since the trader's price is in risk, right? When the VIX falls, the ES tends to climb, showing confidence and smoother trends and continuations, right? Usually, the top is going to be fear, and the bottom is going to be greed. Below price is greed, and above price is fear. So when the VIX rises, when the volatility rises, it's more fear. What's usually happens when people are in fear? They want to close trade, they want to close positions, and farther we go up, dealers want to short the move up, right? They want to short into liquidity. They want to short. They want to manage their risk, right? So when the market goes up, dealers are wanting to short. So that's why when the VIX rises, we usually short off on the ES in the stock market, right? When the market is more stable, that we just have greed. Now at the bottom, when the VIX climbs, the fear spikes, hedging demand rises, option premiums inflate. We got the volatility expectation surge during uncertainty in the market stress, right? At the top, we have the VIX drop when traders feel safer, and option demand protection fades, and the volatility expectation shrinks as the market stabilizes, right? Now, this is what you really need to know. You need to really see the correlation with the VIX. It's literally, imagine if we flip the ES upside down. That's what the VIX technically is, right? It's a volatility index. So this is something that's very, very, very important. Knowing what the VIX is, not just adding VIX on your chart. You need to know exactly what the VIX is and what the characteristics of the VIX. Lastly but not least, then we go over to the charts. How can the VIX help you with your edge? The VIX gives you an edge on ES by showing the shifts in fear or confidence, right? If you're more fearful in your position, what do you usually do? You close it. You might take some off, but when you're confident, you let it sit, right? You let it sit. You might take 1 or 2 off, but you let it sit. You might sometimes even remove, you take profit, right? But when you're confident, you want to let the price sit. Before price reacts, helping frame a bias, confirm trend, and spotting turning points where volatility flows drives an ES direction, right? And remember, this derives from options order flow, right? A lot of people are like, how do you go options flow? Look at the VIX. Look at this. Literally simple. Look at the VIX, right? Now, you don't want to look at every price swing. You want to look at key levels, and you want to kind of just gauge it with price. And that's why I use 3 other assets to help me look at the VIX. Because looking just only at the VIX is kind of tricky at times. Now, 1 point move on VIX can usually swing ES 10 to 20 points depending on the context and liquidity on the positions. Bigger VIX spikes often lead to outsized ES drops. So when the VIX spikes, I'm usually looking to short. I'm not gonna lie. I'm gonna really be honest with you. When the VIX spikes, I'm just looking to short that bad boy. I'm looking to short ES. I'm getting ready for confirmation, right? Now, remember, wait for confirmation always. Don't just short the market. The VIX gives an edge like no other because there's price base. It's not price base. It's derived from options order flow, like I just said. That's making it more forward-looking and fear gauge and greed, right? So you got fear and greed. You can gauge both of them, right? So the fear is above and the greed is below. Often signaling ES direction before the chart itself, right? So this gives you an insight and more of a forecast on the market and how you can gauge the market and use it to your own fruition, right? And the most important thing when being human, you don't want to give the market an insensitive, right? You don't want to just force the market. You want to confirm. Let's say I like to be on side of both of the markets. I like to be long and on short. Even if I'm in the short, I'm trying to get in the way how I can get in long. Right? You have to be open to all the possibilities and ideas, right? Most importantly. Now, when I'm making this video, I have a sore throat right now. It's kind of hard for me to talk, but I have to make the video for you guys because this is very important things. And I know the market is open up tomorrow because today is Sunday, but I will be going over 2 other options 2 trades from last week I will be going over in this video. And this was pretty much about why the VIX can help you with your edge. Alright, so on the left we have VIX, and on the right we have the ES chart. So the most important thing here is to realize, again, this is an inverse correlation. Now, this is ES, so the S&P 500, and this is the VIX, so the volatility index. Now, when the market opened up, this is the 9:30 cast open. We went up, so it should be going down on ES. So if you look at my cursor follows on ES and also follows on NQ. Not NQ, I mean the VIX, I'm sorry. So when I move over right, it follows on ES. So first thing first, I always wait at least 10 to 15 minutes after the market is open, right? I don't really like getting in the market because there's a lot of stocks going up and down, so it's hard to get the best correlation. So almost 30 minutes in that session, we got into my area of support on the VIX. Now, when we're in an area of support or demand, I want to be in the area of resistance or supply on ES. It's always the inverse operations, right? So let's say if we're in the area of support on ES, I want to be in the area of resistance on the VIX, right? Now, with the VIX, it's kind of hard to get areas of resistance, so you want to find areas where we had a turning point. So here, we went up around 10:10. This is around 10:10 a.m., right? So I'm looking to go short on ES. So if we look at the ES, we have we're under the VWAP. We went into the area of supply, and we hit resistance. So I'm looking at short, right? So that's when I get my order flow tools. I have the DOM, I have the bookmap, and I look at the footprint charts, right? So if I would have seen exhaustion, then absorption, I would have got in for a short, my stop above the high. With around a 2 to 3 point stop, and I would have targeted the lows. And we have lows from yesterday down here, and we got an area of support and an area of demand. So here, we went to an area of demand, and where are we at on the VIX? We in the area of resistance and the area of supply. Now, an area of supply, you're just looking to go short. Now, look at the VIX. We overextended. We started shorting off. That would have gave me the confirmation to take longs. So, see how I wouldn't just automatically go long? I would use that as confirmation, right? Sometimes you can't get an automatic entry. You use this as context. So like, where's the context? We going up on ES, we going down on the VIX, we had my key area on both charts. Now I'm just looking for confirmations for entry. We pull back to the area of low volume, and if we're going up, all right, and we have an area of low volume, it should hold, right? So we got in at the area of the midpoint of the low volume node. We retapped in this area of demand. I would have took the entry with a 3-point stop. Then we could have took it back up a high of day. We could have got a high of day breakout right here. High of day breakout, breaks resistance, closed out for the rest of the day. So you see how we kept shorting off on the VIX? If we keep shorting off on the VIX, I'm going to keep holding my entry until we show bullish and sensitive. We need to show any type of bullish and sensitive on the VIX. So what I'm going to do on ES, I'm going to hold my position. You would hold it all the way until market close. Simple as that, right? I hold my entries until the market proves me otherwise, right? Now, if we scroll over to the left here, this is going to be the last example right here. All right. Now, I just want you to look at the VIX. What has happened on the VIX? This is my key area of support, right? My key area of demand. Now, I'm going to ask you a question. If we had a key area of supply or demand and a key area of support, where do we want to be on ES? At a key area of resistance or support? If you would have said resistance, you're correct. Now, you want to be at a key area of resistance and a key area of supply. Now, here, we were chopping back and forth. Like I said, that's why you always wait 20 to 30 minutes before the market opens, because you usually have news and you want to wait to get out all the chop. Now, here, we sold down into my area of support / demand. Now here we started going up. This would have gave me confirmation for longs. Now here, I wouldn't took an automatic short. I would have waited for the market to show me confirmation. Here we broke through this area of mini resistance. Then you could have took a short on ES. We showed down. It would have been your first short. Now you could have took another short here. We sold down, pull back. Now you could have took this easy scalp here when this market started going down. Once we rise above resistance again, I would look and go short here. We sold down, pull back again. You see when we go to pull back, we sold off. When we sell off, we're going to go up on ES. You could have took that scalp, but where's the market overall trend? We're below VWAP, pull back. That would be your last short attempt right here. Pull back. You see how we fell in to create lower lows? But we're creating higher highs. Same thing here. Now, if you look here, we're failing to create lower lows. So these lower lows are protected, right? So I would put my stop loss right below the low. Here, we're failing to create higher highs, but we're taking out the lower lows. So that would have gave me confirmation to pick my stop right above here and take a short with maximum confidence here. So another thing, if you watch Carmine, you know that's a failed high of day breakout. We had a high day breakout. We broke high of day here. And we reclaimed. Once we reclaimed, you could take a short. Boom. First entry. Then we could have pulled back to this area of low volume on this fast price drop. Then you could have looked for entry here or here. Even below VWAP, you could have got a re-entry below VWAP. This is how you can use the VIX and ES as maximum confluence together. Now, if anything don't make sense, just ask me in the comments. Now, the most important thing is to use your own strategy. You don't have to change the strategy at all. Whatever strategy you use, ICT, order flow, which I use, you can use any strategy with this. You can literally add your own twist, whatever you want to add. And this is going to give you the maximum. I'm telling you right now, it's going to give you the maximum accuracy possible. Definitely on direction. I can't tell you about your entries because that depends on your entries, right? If you think too slow, you're going to get slow entries. If you think too fast, you get early entry. You got to think balance. That's how you get the best entries possible. You don't want to be too slow. You don't want to be too fast, right? So you got to be right in the middle. Got to be in the sweet spot. Now, this can give you the maximum edge possible. You don't have to rush it. Take your time. Study it. Now, the best way you can learn this is just not to have ES up. Have your levels and just wait for levels to get reacted. Then that's when you're looking for the bias and direction, right? The most important thing is not to have a bias. Let the market show you the bias and the direction. Then take the trade. Then take confirmation. Always confirmations. Don't try to predict. React. Now, I do have a Discord server you guys want to join. I have a lot of education in there. A lot of really good traders. And everything is free, right? Everything was free, whatever you want to join, and it will be in the description below. If you guys have any questions, just comment. And yeah, see you guys in the next video. And we going over the S-Fix, the next video, and they're gonna be the XLG, how to use both of them together, right? So you guys take care and see you soon.